It's almost 2026. You need to be setting goals. Now, as you guys know, I have 15 years of real estate experience. I have over $1 million in rental revenue. So my goals are going to be probably a little bit different than your goals, but I'm going to go through each one of my goals in real estate for 2026, and I'm going to show you what that could mean for you. So there's lessons in here. Bear with me. This isn't me just talking about my goals, although I'm a big goal setter. Okay, so here's the first thing is your standard flips, just like we talk about all the time on the Solo House Flipper community and the YouTube channel. But I only want to do 4 flips this year. That's 1 per quarter. All right. And that will be the main source of income for me this year. But you got to understand that basically I have Holdco and Flipco. So let's just go through this really quick. I have Holdco, all right, that's the company that I buy properties in. I guess it's not you, it's me. And then it hires Opco. Now, this is the simplified version. I own lots of different companies other than just Opco. You know, there's a construction company, there's a PM company, there's a brokerage, there's all kinds of different things here. The construction company hires a mechanical, electrical, plumbing company that I own, so on and so forth. All right, but that's beside the point. The point here is that by flipping 4 houses, I'm also generating work for the different opcos. So they're also going to get paid. And that's how 4 flips is going to be plenty of income for myself. But that does lead to the next goal, which, so not only 4 flips, I'm also going to do 4 flips to rental. So more like the BRRRR methodology, where I'm going to buy the house, I'll do the renovation just like it's a flip, but instead of selling it to the market, I'm going to go get it appraised, get it refinanced, put a tenant in there. Okay, so that's 8 projects now that I'm doing for my opcos. My opcos are going to get paid to do that. So even though I'm holding them as rentals, I'm still going to be making an income off of it. That's going to pay my grocery bills while I'm also investing here. Next is that I am working on a couple of refinances. So I have 3 houses that came back in a rental turnover, and I have them mid renovation right now. And as soon as they're done, I'm going to refinance those. And I have pretty good loans on them already, which it's painful because 2 of these houses I actually bought with seller financing and at like 3% interest. So the loan payments are really good. But the issue is that when a tenant turnover comes, and these were pretty sizable tenant turnovers that ended up costing me something like, probably $20,000 to $30,000 on at least those 2. So now I have, 50, 60 grand tied up in the deal that I don't want to have tied up, and refinancing is a way to get those funds back. The third one in the refinance is actually one that nobody's lived in at all. I bought it and have been rehabbing it, and it'll be done all about the same time. So that's a goal of mine, is to get those refinanced. I mean, hopefully that's done, maybe even before the end of this year, but, we're planning ahead. Okay, now I have 2 new builds that I already have permits for that, I've already laid out. I have the permits for them. I have the plans on what I'm going to build. That's not usually what I do, but you see one of these rentals in the refinance, I bought, and it had 2 extra lots next to it. It had the size for 2 extra lots. So what I did was I took that house is on one end of this huge lot, and I ended up breaking it up into multiple lots. So here's the lot. Okay, the house happened to be all the way over here. Okay, and so what I did, and there's actually a major road back here and then a road right here. So what I did was I had it split up to where that's a lot, and this is a lot. And actually, I was able to, because of that road back there, I was able to make this a lot as well. Okay, so I have 3 lots. We're going to call that lot 4, lot 2, lot 3. This is lot 1. All right, so this one here is getting a refinance, and then these 2 will get built on. The identical houses right next to each other. I'm actually not building this one because it's going to cost too much money to get off of the road, and the house would need to be built in a weird way. All right, but these were easy to get at, and it's going to be a new experience for me. I don't do a lot of new building like this. I've done a little bit, but this will be really good. But here's, as we talk about income and the Holdco and the Opco. All right, so obviously Holdco, which there's multiple Holdcos, which we're going to get into, but Holdco owns all this and is going to pay Opco to do that work. And, basically I already own all this stuff outright. And so I'm able to get a loan to do this whole new build. I think it's going to be around $200K for each house. So $400K. It will likely cost me around, I don't know, $170 for each new build. All right, so that will be for me $340,000. I'll have a $60K profit, which goes to Opco. Okay, once again, generating the possibility for more income for my Opco, more grocery money if I need it. Now, next is the new builds, and now I have a commercial development that I'm doing. All right, and this is the same kind of thing. Holdco owned the land. It used to be a house. We tore down the house, and now we're doing a commercial development, basically 2 simple metal buildings. It's like a $400,000 project, though. Commercial development costs a lot. There's a lot extra steps. That's why it's not my main thing, but I have this lot, and going to take advantage of it. But that development should be done. This was going to be actually my new office, but once I figured out how much I could rent it for, I was like, well, not going to do that. So I'm going to end up renting it out to somebody else. I think it'll pay around $4,000 a month. Great deal. And then I will move to my next goal, which is start a new commercial project. So basically my plan has been to have a couple of new builds and one commercial project going on in the background each year. My primary is still burrs and flips. That's how I've gotten here, and I will continue to do that. Now this leads me to the next point. So like we talked about with the Opco, okay, gets hired by Holdco. Well, I have multiple Holdcos, and I don't know what I wrote there. That was like Holdco. All right, multiple Holdcos, right? And the reason why is because I have different partnerships, which is the way that I was able to grow. Okay, so we have a private equity fund as well. Okay, so I might own certain pieces of this, maybe 50%, maybe less in the case of the fund. And these all are going to have their own goals, and they're, of course, going to hire Opco. So I'm the one that does all this stuff. Okay. And so now I have goals for each one of those main companies. All right. Number 1 is, I just realized that I got rid of my iPad. If I want to show you again, hit the wrong button. All right. One of the partnerships, I have a quadplex that got burnt down, and I am looking to finish the renovation on that. We've already like put the roof back on. We have gotten through most of the mechanical, electrical, plumbing, rough inspections. We have also borrowed a few $100,000 to do this huge renovation, which once again, Holdco paying Opco from lended money. And I'm hoping to get that done and rented out. Obviously, that shouldn't take all year at this point, especially since I'm through the toughest stuff, which is the permitting and getting through rough inspections, the gauntlet, as I call it. Okay, and then I have another project in that partnership that is currently on the back burner. A renter moved out, left us a turnover, and I just haven't had the bandwidth in the OpCo to go get it done because right now there's, I think, 17 projects that I have live. Okay, and then I have another duplex that I'm running into all kinds of issues with the city that they want me. This is a whole story in itself, but basically they want me to tear down the property is what they really want, because they're saying that there's structural issues, and this got into all kinds of legal stuff. But basically, I hired a third-party structural engineer, and now the structural engineer is telling me what to do. And hopefully the way that works out is if the structural engineer confirms that it's okay, then the city will also back that. But I'm trying to get through that, and it's been a long process, almost to the end. Got caught up on a couple of things, but once I get through that rough building inspection, now I'll be able to get through the do the easy stuff like the installs. I'm going to show you here the process. All right, so basically you have like pre-construction, right? This is getting permits and plans and all that kind of stuff. Pre-con. Okay, and once construction starts, you're going to do all of the like framing and structural work. Terrible handwriting. Once I get done with all of that, then I can do the HVAC, plumbing, and electrical. And gas if it has it. But all right, and each one of these are going to have inspections as well. This area right here is what I call the gauntlet, because you got to get through all those inspections. And guys, this takes so much freaking time, but we're almost through all of that. And then after we get through this, then it's simply, floors and paint. Then we have like installs, let's call it, which is cabinets, countertops, all that crap, appliances, and then final inspections. But final inspections are never as complex as the rough inspections. So hopefully we're free and clear here soon. Blue skies ahead once you get through the gauntlet. And so my goal is to get that thing done, get it rented, get it refinanced. That one I also have seller financing or subject to financing. Great deal that I got on 10 properties a few years ago, but so much money. I mean, that whole project is probably going to cost around $100,000. We had to do all kinds of crazy stuff. Okay, next partnership is one where we're doing a commercial development is not the right word, because development would be like, in my head, raw land that you're taking to something. More like commercial remodel, but it was a lot of work on a big building. It's actually, this is my office here. Right next door is that commercial building, which is like 21,000 square feet, big parking lot. And we renovated one of the spaces, rented it out, and the city required us to redo some of the parking lot stuff. Anyway, lots of money in, a few $100,000 worth. And once all of that gets stabilized, renters in there, the project's completely done, which is getting close, we'll be able to do a refinance and pull that money back out, which is a great situation. And then there's one other like 6-unit apartment building that we're doing a refinance on. Had a partner that we're buying out a all agreed upon deal. So I got to do that refinance as well. And then we have another partnership that we're working on currently, 2 refinances, one on a property that we've owned for a long time, another one on a Burr deal gone bad. This house cost so much freaking money to get through. And the main thing with this house is it's like, the huge advantage of renovating versus tearing a house down and rebuilding new is that you get to reuse a lot of the stuff that's there. And so, it's not that you're cutting corners, but a lot of times you're patching in what's there. Okay, this is one of those houses that patch led to another patch, led to another patch, led to another patch. And hindsight being what it is, that one should have gotten torn down, or at least, gutted. I don't like to tear houses down, but if I would have gutted it, the house would be in much better condition, and it probably would have ended up costing less. But, how many projects have I done that I was able to keep moving it forward? So that's just one of those risks in the game. But anyway, that one costs so much that we actually have to refinance the other one to bring forward some of that money into this refinance to actually get it closed without taking a whole bunch of money out of each one of our pockets. Now, I know that I say that equity looting, which is exactly what I'm doing there, is a bad thing. However, the alternate is me bringing cash out of my pocket. This is in a partnership, so we're trying to keep it segmented there instead of having to do a capital call. That's where the partners bring in more money. But we will be tight there. We'll probably be at like 70 to 80% equity. It'll be all right, but not the ideal situation. Okay, and then we have 2 funds that you call those partnerships as well. Got a 12-unit apartment complex that is getting renovated right now, and basically the plan was to buy this 12-unit apartment complex, and then we would start. Most of the tenants were on month to month, so we would move a couple of them out, renovate those, and then we'd rent those, move a couple more out. And it turns out that the market has been more difficult to rent in than it's expected. So we've actually had to lower the rates. And now we've kind of halted on being as aggressive and, moving people out because, the earlier ones aren't rented yet. And so we don't want to get too far out over our skis there, but it's kind of like an interesting situation because it's like, if I finished all of the units, the building itself would be nicer, therefore it would more likely rent. But if I did that, I would be more money out with less money coming in. And so goal is to get that project completed this next year. Got another one, which I'm going to be making a video about soon, where it's a structural issue, big structural issue. It's a duplex that's on a slab, and it has sunk. And I hired a structural company in town to come in, and we're having quite a large dispute about what done means. And so that one I'm working on as well. The goal with that one will be to finish the project and most likely sell it, maybe fill it and refinance. And then finally, in that same fund, or there's two of them there, that we have four properties we bought off of this one guy, but we bought it on seller financing with a balloon. All right, this is why I don't like balloons, because we are forced to do something about it this year. Right now, they're sitting just fine. Mortgages are getting paid by the tenant, just like you would like. But because of that balloon, we need to act. So either sell or refinance, most likely refinance. But one of them right now just got turned over. Therefore, we're right in the midst of a construction project on it. So those are my goals from a real estate standpoint. I know that was probably a lot, but you can see what things look like. And, what it seems to look like as I'm going through all this stuff is not necessarily a lot of new, a lot of taking care of what's there. This might not seem like a lot, or it doesn't seem like a lot to me, because I have to leave a lot of room for turnovers. So in 150 units owned, we commonly a turnover will happen. A tenant moves out, and the renovation is just a lot. And even though we have the property management company, it's a lot of times I'll take on the tenant turnover like it's a new renovation project, because they're that big and I can save a lot of money by doing things the way that I do things. Okay. And then, just if you care, I always break down goals into a few different categories. You have finance. All right. That's what we were just talking about. Those are my real estate goals. And then there's business, which most of my business goals, other than the flipping the four houses and operating the OpCo, is about this digital, the digital community, as I have written here. And then you have your personal goals and you have your family goals. Hopefully you guys took something out of that other than me just sitting here talking about my goals. But there they are, and I'll talk to you soon.